Hey everybody, this is Chad Smith with The Real Solution. In our highlight video this week, you're going to see us setting the stage to transition from how to get your offer accepted into how to have conversations with anyone about rising interest rates in real estate. There's all kinds of factors at play here. Loan originations across the country are down 48% from a year ago. 63% of mortgage companies are laying off staff members. What does that mean to you in your real estate market? Here in Dallas-Fort Worth, we're still dealing with bidding wars in most areas. So I'm going to put in the description a link to our webinar on how to get your offer accepted if that's still a factor for you. And then in addition to that, I'm going to invite you to our live training from 9 to 1 in Southlake, Texas, this coming Tuesday. There'll be an invitation in the description below. We hope you can make it. We're going to be talking about how to win with rising interest rates in today's market. Fastest 3-week rise since the 1980s. So rates have literally gone from 3% all the way up into the 5s just in just about a month. And then the Federal Reserve has announced that they plan to continue to raise rates for the rest of the year, which means it's very possible that interest rates for mortgages could end up in the 6s or 7s by the end of the year, in the 6s as early as the summer. And another thing that I've noticed is that people have more equity than they think. So who do you know? Not do you know anyone? If you say, do you know anyone who is thinking about buying or selling real estate? They could say what?
No.
No. So you say, who do you know? Aha. Okay, write it down. Don't say, do you know someone? Let me give you an example. I was in a store yesterday. It turns out that this particular store I was in, there are 300 and something of these stores in the nation. And this has been the #1 store in that chain for 30 years in a row. They're kind of good at what they do. And I had no idea until yesterday that was the case. And I'm talking to this lady, really cool lady. She's a Russian immigrant. So I was asking her about what does the news say in Russia about the war, but that's a different story. But I'm talking to her and she says, by the way, when I met you 2 days ago, I was so impressed. I went home and told my husband that the next time that we sell our house, we have to use Chad. And she said, and also my sister's coming here from California. And so I told her that I'm going to give her your number and so that you can help her. And we teach people how to think. And so I think even when that happened, when she said it may be a few years we're gonna sell, I said, well, who else do you know that might need my help? Because it'd be an honor to serve them. And then she said, well, my sister. And then she said, I will give her your number. But my job is to teach people how to think. And right there, I said, what we found is that if you just give them my number, they may lose it. But if you ask for permission for your sister, for me to call them, and then you call me with their information, I will definitely call them right away. She went, oh, that makes perfect sense. Okay, I'll talk to her tonight. I'll have her give you a call. Her sister's selling a $3 million house in California. And then they're going to be buying here. Right? But there's these little things. It's the little things that you don't do that there could have been an open door and we don't walk through it. We say, do you know anybody who wants to buy or sell real estate? No. It's the same as me walking into Best Buy to buy a TV and I walk in the door and I don't want to be bothered yet because I'm at the entryway. I'm not by the TVs. And they go, can we help you? And I say, no. And then I go back and I look at TVs for 20 minutes. And then they say, can I help you? Yeah, I want to buy that TV right there. So who do you know? All right. I saw eyebrows raised right there. So who do you know? And then from there, the seller says to Jason, well, I know we don't want to sell this, but I have this rental property. So even though he said, who do you know? It just still jogged their memory to think next. And then we get to this rental property. The best scripting is that no one can time the market. No one can time the market. We can see signs, but the reality is we thought what's happening right now was going to happen at least 7 or 8 times over the last decade. And we could show up to work tomorrow and Powell could completely change his tune. And
convinced when COVID hit that there was gonna be all these foreclosures,
yep,
and then the government intervened.
I mean, I had a house that I wanted to desperately sell right before the election, because I was worried about what would happen after the election. Had I held on to it, I would have made a whole lot more.
yeah, and so that's why we still have to be careful with that. I guess financial advisor thinking of selling, I would just stop right there, because like if you can own a home, I would recommend owning a home, versus renting. I mean, it just, even if prices dropped, I mean, if you're just throwing away money, and it's not a little bit of money now, it's a lot of money. Like you get no tax benefits, no control of what you pay.
Well, yeah, that your taxes can only max out at 10% as long as you have a homestead, whereas your rent can easily go up 10%. And then it's only tax and insurance that are gonna change. So if you think about it, that is your, like, a part of your payment, and maybe 50%, they can go up 10%, so that's actually a 5% increase.
Yeah.
Compared to a 10 or a 20% increase. Because what happens when the interest rates go so high and all these people can't buy or don't wanna buy? We're probably gonna see the rental market continue to appreciate because of what's happened with interest rates and people's affordability for houses.
Right. But again, we don't know what's going to happen, but just like, I just wouldn't want to, for the network, I wouldn't want to use the example of some guy that's a financial advisor sold his house to rent for a while. Like I don't want to share that message, because financial advisors make their money
Investing.
No, they don't. They make money selling people products, and they do not live off investing with their own money. And so that's a Robert Kiyosaki thing. Like Robert Kiyosaki's like, before you hire a financial advisor, ask them if they live off selling people products or if they live off their investments.
Yeah.
Right. So it's a little bit of a rabbit chase here, but I'm also working to make sure I'm getting the right mindset out here. There are investors that are selling just because they see what other people are willing to pay, and then they're taking that money and they're doing other things with it, buying additional investments, building reserves, doing other things, right? The only reason that you would sell and then rent is because you got yourself into a position where you can't comfortably afford to live where you are, and then you need to like reset and then find another entrance into home ownership. But I would recommend getting into home ownership as quick as you can, because it's a forced savings account, right? Like you're just saving a little money every single month. Historically, you're building equity. That's not a guarantee, because prices could go down, and you get to write off your mortgage interest on your taxes up to a certain amount. So there's just benefits to home ownership. And so there are folks that could sell just because for them there's equity. And then if they have a strategy on what they would do with that money, then I would recommend doing that. Let's just not share to everybody, hey, we know people that are selling and then renting, because I think that I wouldn't want to see that replicated across the network. Does that make sense? Okay, now I just got this in my email. This is the Metro Tech's April report. The average sales price is up 20.3% from April of last year. The active listings are up 3.9% from April of last year. Closed sales are down 3.5% from last year, and we're at 1.3 months of inventory. That is actually healthy. It's moving in the right direction. Now, that means there's less available sides per agent, but we're in a spot where the market was unsustainable. Like we actually will be better off getting to a spot where you could more than likely find a home for your buyer. And a seller may not get 38 offers in the first 3 days. We may actually have to help them market, and it may take a while. And like we need to get back to, maybe I should not use a crack analogy. Maybe would steroids be better? Like we've been juicing and now we need to go natural. Like what? Steroids. We're gonna go with steroids instead of crack. Okay. All right. We were on steroids for 2 years, and now we're gonna eat our cereal milk protein, broccoli and vegetables, and we're gonna work out.
And that's the whole thing is we borrowed from the future, as your analogy was earlier
Yeah.
about the tax credit. And now is whenever we're gonna have to adjust because of all of that stuff that's already been done.
Yes, this conversation today is about us seeing what's coming and adjusting back to really they're attempting to balance out the chaos from 2 years ago. Whether or not they were going to pull it off, we don't know.
Well, and one of your favorite things to point out in regard to hedge is rate of change.
Yeah, the rate of change has been the highest in all of history. The speed at which interest rates have risen is the biggest challenge. Okay, so now we get down to it. Now we can finally start talking about some solutions. The Fed is on a mission to slow this thing down because of the prices just going through the roof because of all that money creation. We are going to be the most skilled agents in all of North Texas, period. Nobody, I guarantee you, I don't know this, but do you know anybody else that is teaching anything like this? Okay. Okay, so let's go through the journey to the real. Journey to the real, the horizontal line. This is your month's supply of inventory. So right here, smack dab in the middle would be a balanced market. So if you have less than 6 months, these numbers are your month supply, 5, 4, 3, 2, 1. If you have less than a 6 month supply, it's an extreme seller's market. If you have more than a 6 month supply, it's an extreme buyer's market. And then depending on how extreme it is, you have more or less qualified buyers. Okay. Now, but yeah, absolutely. And we'll give you this too. We're going to give you guys this slide deck as well. If you go back to the Great Recession, the blue line was buyers. So there were more buyers that were out there. It tailed down some because they tightened the lending requirements. But back in the Great Recession, remember this vertical up and down line. This is the number of people who could qualify to transact. What did I say? About 50% of all the buyers were underwater, so they couldn't even sell their home. So there were very few qualified sellers back here in the meltdown. And then the buyers were dropping as well because of the lending requirements. But here's where we are in 2022. Like pretty much anybody could sell their house because only 2.1% are negative equity. See it? So there's tons of sellers. You should be listing everything you can. And then not everybody can buy because of rising interest rates and because of how high prices have gone. Remember, affordability has dropped. So that's the journey to the real. Now I created this today, and this is going to be a tool that we're going to use going forward. And let's say, Chris, you're on your buyer consult and they say they want to buy in this particular neighborhood. Or let's say you're on a listing appointment, Devin, and the seller says that they want this certain amount for their price. So you're going to be able to explain, Mr. and Miss Seller, Mr. and Mrs. Buyer, this horizontal line is month supply of inventory. If we were balanced, we'd be right here in the middle, right? You got this on your iPad, right here in the middle. But if there's more than 6 months supply, that means that it's in favor of the buyer. It's an extreme buyer's market. And if there's less than 6 months supply, then it's in favor of the seller. And like I went on a listing appointment yesterday and it was land. And I said, Mr. Seller, all of the market is got less than a month's supply of inventory. But for the land within a mile of your land or 5 miles of your land, there's 12 months supply. So it's actually a buyer's market, which means that he had to get real, right? He couldn't just pick some number out of thin air. Is this a good tool to just simply just drop a dot? See, and then if this is on your iPad, before the appointment, you run your CMA and you just drag and drop. You just drag and drop the circles. You understand what I'm saying? You would just simply, you run your CMA and you realize, you know, the MLS is right here. Mr. Seller, you're right here too. Or you run the CMA and you say the MLS is at 1 month supply. And, you know, and then there you go. And you're right here. Would that be a good tool?
Yeah, oh yeah.
Okay, good. I was really grateful that that came to me yesterday. If you're naturally a good salesperson, you probably don't want to take the time to go build all of those systems and track them all. If you'd like to set up a strategy call where I could show you a couple different ways you could get access to those types of tracking metrics, just go to realsolutioncall.com and I'll be happy to help you.